So agency banking is trying to solve what is really a last mile problem in financial services. So in emerging markets, we've got populations that are actually quite rural. You know, in many places we have, 70% of the population is in rural settings and 50%, 60% and so on. And so there's a proximity problem. How far can somebody be from the nearest bank branch or the nearest ATM? And so the idea about agency banking is to empower small businesses to become mini ATMs, to provide financial services in their cluster, in their area. The last mile, so the place where the banks can't afford to put an ATM because it would just be too expensive to put it there. People in the banks often haven't really heard of agency banking. And only when they go through and they understand the cost structure of running a network do they see the opportunity. When we get to the technical divisions, normally we don't have a problem because we can quite quickly convince them, we've done it over there, we've passed those regulations, we certified with the central bank, we certified with the regulator, we got this bank. So we got all the credentials to prove that we can do it, and we can do a proof of concept. So it ends up we solve the tech problems actually quite quickly, it's just a process. But the challenge has been to try and convince or let the business people understand the opportunity that they have about having a bigger banking distribution network. So the plus about doing that is the merchant's the only one that needs a smartphone. And so you only need to train one person as to how to use the system. And then he provides the service for everybody around him. That's the big plus against doing, for example, a pure retail type system where you have to try and train everybody and then you have to wait for everybody to get a smartphone. The merchant becomes a personal face to the bank. It's like having the benefit of a bank branch because there's a human being that people trust and they can talk to. But at the cost structure, that's way less than an ATM. What ends up happening is the merchants find that they benefit directly becoming an agent. And they benefit firstly because every time they provide the service, they get some income. So we share the convenience charge with the merchants. The second time is people come to them because they know that's where they can withdraw money. That's their ATM. And so they get a lot more foot traffic. So it drives customers to their shop. And the last is they become, a trusted provider or an agent to the bank. If somebody's interested in a savings product, they can go and speak to their merchant, who's somebody they already know and trust. Yeah, basically we use only certified devices. So we use a terminal, which is a POS terminal, which banks understand, and all the encryption happens in hardware. So even the mobile phone that the merchant uses can't see what's being transacted. So the encryption happens all the way from the terminal all the way to the back end. And our encryption is generally better than their ATM systems and all the rest because we layer SSLs, pinning, hardware encryption, we've got HSMs and all the rest. So our security model is actually better than the banks typically, but we also go through all the certifications. We get certifications from the EMV, from the card schemes, from the banks, from the regulators and so on. So we've done the testing. We have penetration testing done on all of us. So there's a lot of external parties that provide assurance that the system is secure.